Alright, welcome back to Closing Trades. Let's touch base with Zensar and Ganesh Natarajan, Vice Chairman and CEO of the company. In fact, Vice CMD and CEO of the company joins us right now to talk about the numbers and the outlook going ahead. On a quarter-on-quarter basis, 37 odd crores, slightly above that in terms of Q4 PAT versus around 34 crores. So that's a 10% growth they have done on the bottom line front. Close to around 40 odd crores terms, 40 odd percent on the top line front. So not bad going, includes an acquisition as well. But to explain all of that, Ganesh Natarajan joins us for that. Ganesh, thanks so much for joining in. Firstly, congratulations, 10 odd percent growth bottom line. But how has it come about? Is it essentially because of an uptick that you've seen in volumes predominantly?
No, I think all parameters are good because we have seen good growth in all markets. In fact, if you look at a year-on-year basis, we are looking at increasing revenues across all verticals, all horizontals and all markets. Also, the acquisition we have done has been very timely because it is in the very hot data center and information security space. So not only for this quarter, but going forward, I think we'll have very good benefits of this acquisition.
Right. Ganesh, you've also got a very optimistic outlook till FY13 in terms of the fact that you aim to double your revenues till then. Is that on track?
Yes, absolutely. We did 950 crores FY10. So FY13, the goal is to do at least 1900 crores. And again, as I said, I think we've had a phenomenal year because the team has been excellent. In fact, all members of the team, we have some very young new additions to the team as well. I think they're really contributing, and I think in this environment of volatility in management that we all know about, I think we've been lucky that we have very good teams. Even the company we've acquired brings in a strong capability in infrastructure management. So very confident both of doing what we expect to do in the next 2 years and even beyond that.
A question, how it's been in terms of your client budgets for this particular period. Have you seen a significant up move there as well as your deal pipeline? How's that shaped up?
See, on a broader basis, yes, client budgets are increasing. In fact, not only are the budgets themselves increasing per se, but we're also finding moves towards more of offshore, more of outsourcing. Specifically for Zensar, we've had a bit of a setback in one of our top clients because they're not doing particularly well. So they've cut back on their spending. We're hoping that revives probably around August, which is their financial year. So apart from that one client, I think overall the pricing environment is fairly stable. And we are seeing across all markets except Japan, we're seeing a lot of improvement in what they're willing to spend and the discussions they're having with us.
Right, you said very categorically, Ganesh, that this is going to be an important year for you, FY12, in terms of a big bump up in profits. What's the guidance? Even if it can't be in terms of specific numbers, we would love specific numbers from a viewer point of view, but what's the outlook?
Well, in terms of guidance, I mean, we certainly expect to do over 1600 crores in terms of revenues. Profits still early because, I mean, it's very difficult to predict currency, as we all know. And plus, there will be some acquisition-related costs regarding profits. So, I've always said that we want to maintain double-digit profitability going forward. And obviously, it's much higher now. But remember, we bought an on-site company which is lower profitability. So, I think profits will inch up, definitely much higher revenues. And as I said, we're looking at a 3-year outlook where everything looks rosy at this point of time.
How's Akibia shaping up? And, more importantly, I would want to know, you mentioned in the past that you'll work on a string of pearls strategy. Are there any other acquisitions that you are planning in FY12?
I think that the first one was a pretty big one. So no real big ones. I think it will be more tactical because we've now verticalized our entire offering. So which means that we're operating as 5 verticals. Each of these verticals we're looking at what should be the organic investments. Like we just finished a board meeting where we talked about significantly investing in SAP, for instance. And going forward, I think we will look at maybe some tactical acquisitions, but more important, growth in all verticals.
What about Akibia?
Akibia is doing very well. In fact, it has turned out to be a better company than we thought because we thought we were just buying an on-site company. But we already have an engagement plan in place where we're finding that new customers and existing customers are very keen because this is a unique model. Nobody quite has the model that we have today, which is data security, information, data centers, and remote infrastructure management. So I think once we do the integration of the Zensar Akibia brand, we'll have a phenomenal story to tell to all our customers.
Right, you spoke about the currency positions and how it could be a bit unpredictable, but could you highlight a range perhaps on profitability and margins for FY12?
See, as I said, we are definitely looking at double-digit profitability, and that is still the agenda. The monkey in the pack obviously is both the dollar and what could happen in certain markets like Japan and Europe. But apart from that, and of course, I mean, we still have enough levers that if the revenues don't pan out the way we're expecting, we can still tweak costs to make it happen. But as I said, our team is very confident. Our team is confident both in terms of bottom line, and as I mentioned earlier, I think we have a fantastic team, which is all set to make this happen.
Right. Ganesh, we just heard the management of TCS and they were talking about how they've hired that 17,000 kind of number of employees, and also, their increments in the range of 12 to 14%. So they're okay to digest that kind of, increment on their margins front. They say they're not going to be impacted too much on the margin front. What's the case on this front for Zensar in terms of your employee costs, your increments, hiring, all of that?
See, that is an area of concern for all of us, and in fact, obviously all of us will give significant increments. Our increment range will be 6 to 22%. I think it will average out around 9.5 to 10%. But more important, I think all of us have to look for improving the whole utilization, which is something that's happening. We are investing heavily in intellectual property creation. So in each of our verticals, we are identifying areas where we can make our revenues non-linear, and over a period of time, I think you'll see the impact of that. So at this point of time, I think the best levers we have is some increase in pricing, better utilization, lower cost in terms of actual marketing costs, which will continue to happen, and most important, investing in IP. So all these are on track. We have specific milestones to make it happen. So I'm fairly confident that you will see the results as we go on.
All right, Ganesh, we wish you all the best, and thanks so much for taking the time out and joining us in the studio with the details of your numbers. That's a very confident Zensar Technologies management, 10% odd growth on bottom line. Top line has grown fairly well, and they expect the year ahead, in fact a couple of years ahead, to be very robust.